Tip 41. Understand compounding. You must have heard many financial experts saying that invest only 1000 monthly and after 30 or 40 years you will have crores of rupees. This is the process what we call compounding. As we have discussed earlier that you should invest for the long term. The reason behind it is compounding. The longer you stay invested, the more your money will grow. Let's understand it with an example. Today you invested 1000 rupees and you're getting 10% rate of interest on it. After 1 year your money will become 1100. Now next year you will get interest on new principal which is 1100, which will be rupees 110, and your money will become 1210, and this process will continue. During compounding of money, some ups and downs can occur. If you are investing in stock market, then sometimes your money will grow less and sometimes more, but you don't have to allow that emotions to overcome yourself and be invested for long term. From this another concept arises, which is start as early as possible. Let's see in the next point. Tip 42. Start investing as early as possible. Warren Buffett, who is the richest investor of the world, started his investing journey at the age of 11. Yes, you heard it right, 11 years. Warren Buffett's skill is investing, but his secret is time. He also says that even when he was young and did not have much money, he did not doubt for a second whether he would become rich or not. He knew that he has to become rich. The biggest reason behind this is compounding. To grow your money exponentially by compounding, you need to be invested for long term. And if you start your investing journey early on, like in teens or in early 20s, then you will be able to make more money. That's why start reading about investing from now on YouTube. Financial experts explain complex topics in simple method. Tip 43. Don't run behind high returns. Jim Simons, who is head of hedge fund Renaissance Technologies, has compounded money at 66% annually since 1988. No one comes close to his record. Today his net worth is $24.4 billion, whereas Warren Buffett has compounded money at 22% annually, which is 1/3 of Jim Simons, but the net worth of Buffett is $105 billion. You can see that what the role time plays in investing. That's why if your friend is saying that he is earning more returns than you, then please don't take tension. Always remember this scenario that if you will invest for long term, then low returns will not be a problem for you. Always remember good investing isn't necessary about earning the highest returns, because getting highest returns every year is quite difficult. Good investing means earning pretty good returns for the longest period of time. That is when compounding does its work. Tip 44. Don't take financial decision under pressure. Most of the people take financial decision under pressure. Their friend has bought a new home, and by this the ego gets hurt, and they also have bought a big home by taking a very big loan. Someone got into a fight with his partner, now he took a big loan to prove the partner. See, most of the financial decisions that are taken under pressure, they are not profitable under long term. That's why I'm requesting you, do not take any decision emotionally. First think with cool mind and then do something. Tip 45. Don't invest in get rich schemes. Earning money is not that easy. If your friend is saying that he has doubled or tripled his money by investing in this scheme, then understand that it is a scam. Therefore, do not come under greed and drown your hard-earned money. God checks you whether you are worthy of that money or not. So do not invest your money by falling in the guise of any such schemes. Tip 46. Always invest in yourself. Most of the people are ready to buy a new car or a new phone, but think while investing in themselves. Warren Buffett says, the best investment which you can do is in yourself. So instead of spending extravagantly, invest in yourself. You can invest on yourself by taking courses that will help you in your career, by reading books. All this will help you in upgrading your skills. Always remember Warren Buffett saying, see, if you will upgrade your skills, then you will be able to earn more money, because only those who have more skill earn more money and can give value to people with those skills. Tip 47. Respect money. Being anti-wealth will prevent you from becoming wealthy, because you will not have the right mindset for it, and you won't be dealing with people on the right level. Make a good perception around money and around rich people. Please do not say that money is the root of the evil and the ones who have money have trouble in their house. Your subconscious mind will understand that you don't respect money, and it will not attract in your life. Tip 48. Take a life insurance. In life insurance, if your death happens, then your nominee gets an insured amount. That nominee can be anyone, your spouse or your parents. Before doing any investment, buy a life insurance, because as your earning member of your family, and God forbid anything happens to you, then your family will be unable to survive. There are mainly two types of life insurance plans: term plan and endowment or maturity plan. Let's see both of them in detail. Plan 1, term plan. It looks like a childish thing, because if you bought a term plan at the age of 25 and the plan is till the age of 65, then you will pay a premium to the company for 40 years to give You cover for your death. But as we all know, if nothing happens with you in all those 40 years, then at the age of 65, company will give you nothing. And that is the reason why people called it childish, because you will pay the premium for 40 years. And if nothing happens to you, then you will get nothing. There are some benefits of this plan. You will get a big cover for really small premium. Like you can get a cover of 1 crore at just a yearly payment of 5,000 or 10,000, and the amount is fixed. This means in first year you have to pay rupees 10,000, and even in last year you also have to pay the same 10,000. Premium does not increase with time. Plan 2, endowment plan. This is like a maturity plan. They are the plans which return your premium. For example, if you bought an insurance at the age of 25 and the plan is till the age of 65, and if nothing happens to you till the age of 65, then you will get an amount from the company. It can be a lump sum amount, or it can be a quarterly payments for some years. There are some disadvantages of this one. To get the same cover of 1 crore, you have to pay a bigger premium, like 15,000 or 20,000, which is quite high. Now, you must be thinking, wow, if nothing happens to me, then I would get my money back. But one thing I would tell you, that the return which company will provide you, you can also generate that return by yourself. This is my personal recommendation, that instead of buying endowment plan, buy term plan. Tip 49. Take a health insurance. You must buy health insurance for your whole family. Take a plan like this in which your whole family gets covered. Health insurance is quite important. If God forbid anything happens, then you will have financial safety. If you do not take health insurance and God forbid someone gets into an accident in your home, then you have to take out money from your savings, and if you do not have money, then you may have to take out a loan, and there is a chance that you will not even get any loan. And that's why taking health insurance is important. Before doing any investment, first buy health and life insurance, and then start building an emergency fund. Tip 50. If you are young, then don't buy a new car. As we have discussed earlier, people buy many things just to show off, and one of the things which they buy is car. Some people do not need car, but just to show off to their friends, they buy an expensive car. Car is an asset which loses its 30% value as soon as it gets out of the showroom. You have to do many types of expenses on car, like maintenance expenses, parking expenses, and the biggest petrol expense. If you have to go office to home and home to office, and sometimes going out with family, then I would advise you not to waste money in car, rather than use cab, bus or metro. But if you use car a lot, then buying your own car is the best option. For that also you can think of getting a second-hand car. So friends, these were the 50 tips with the help of which you can learn a lot about investing. If you are new in this field and you do not even know how to invest, then after watching this video, many of your problems would have become easier. Friends, you must have seen this video how easy it is to become rich. But most of us are not able to become rich because we do not use our money properly. We hope that after watching this video, you will put your money in the right place instead of wasting it. Please like and share our video. Comment which is your favorite tip. Subscribe our channel to get this kind of videos regularly. And finally, thanks for watching.